Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Oh my gosh, the gold to silver ratio is insane right now. It is up to 98.44 to 1, meaning it takes 98 ounces of silver to equal 1 ounce of gold. It's up 2.1% on the day, and this is crazy. We're about to see 100 to 1, which we haven't seen in 3 decades since the 1991 level of 100. The gold to silver ratio historically is around maybe 60 to 1, 70 to 1. It actually used to be 2.5 to 1 in biblical times. In the 30s, FDR changed the gold to silver ratio from 16 to 1 to 75 to 1. So a lot of manipulation going on, but why is this ratio so exaggerated right now when gold to silver ratio coming out of the ground is only 8 to 1? Every 8 ounces of silver we dig out of the ground, we find 1 ounce of gold. So the ratio shouldn't be too far from that level, right? From that ratio. But it's almost at 100 to 1. This ratio shows which metal is the better purchase, whether it's gold or silver at the time. Right now, gold is outperforming silver, but surely, sooner than later, silver is going to have to catch up to gold because this ratio cannot stay this high for too much longer. So I have an article from businessstandard.com explaining this ratio, what's going on, so link will be in the description. With that said, smash that like button, subscribe if you're new. Let's see if this video can get 100 likes. Every single one of you, go like this video. Let's jump into this video. So, the gold to silver ratio, which indicates the relative strength of the two metals, is testing the 3-decade high level of 100, seen in February 1991. That was before I was even born. The current ratio is 96.5, and actually that's higher. Since this article is written, the ratio is actually 98.4. So, the ratio rises when silver underperforms gold. In the past, whenever the ratio has increased to a very high level, it has never sustained and it's fallen. The ratio shows how many ounces of silver can be bought with 1 ounce of gold. Traders in India, like their global peers, trade on the basis of this ratio. If they expect the ratio to rise, they will buy gold and sell silver. So you can use the gold to silver ratio to your advantage, actually trading silver for gold or gold for silver, and using the ratio to directly see which one is the better purchase at that moment in time. The gold to silver ratio is currently at 98.4, so I'm going to crop that out. 98.4, it is seen to jump about 19% in the past 6 months. Gold prices have also jumped in this period to Rs 44,960 per gram, moderated thereafter. This shows the market clear performance of gold, Ajay Kedia, director of Kedia Commodities, said. Globally, the demand has been rising in the past 6 months as central banks have been buying gold. Gold prices also got support from the U.S.-China trade war, U.S.-Middle East geopolitical tensions, and the rapid spread of the COVID-19. Traders are still buying gold as a safe haven in these uncertain market conditions. Silver remains stable compared to gold as industrial demand is poor. The gold to silver ratio can reach the 1991 levels of 100, Kedia said. So these ratios are not out of the realm of impossibility, and it's actually only 2 points away from it. So, in the way things are going, as safe haven demand is looking like safe haven metals are the place to be, this will accompany gold and silver. But remember that silver does usually follow suit what gold does. If gold is outperforming silver, sooner than later, silver will outperform gold. So that's something, because silver is gold's little brother, and silver usually does follow suit. So for people that are mainly, focused on silver, this could be good news. So far, traders have been saying that the ratio will not sustain at high levels, and silver will start outperforming gold. This is possible if gold falls faster than silver, or if silver rises faster than gold, obviously. However, they are now refraining from commenting as silver still doesn't look strong following weakness in base metals. This is important as over 55% of silver demand comes from the industry. There are reasons for gold to rise further or outperform silver. They're saying there's even more reasons why this ratio could go even higher. So Metal Focus, a London-based consultancy, said in its latest report on gold that apart from spreading the virus causing damage in newer areas and the Federal Reserve sharply cutting interest rates, the impact of political turmoil and geopolitical tensions also proved positive for the metal. Among the various problems, some that stand out include uncertainties ahead of the U.S. presidential election as well as Brexit negotiations and ongoing tensions across the Middle East. While projecting further rise for gold, the consultancy said, "We are also skeptical that fiscal monetary stimuli introduced by policymakers will be sufficient to rescue the global economy." Prior to the virus outbreak, not only had nominal interest rates been kept at historically low levels across key reserve currencies, central banks' balance sheets have also ballooned since 2008. As a result, despite some near-term market relief, the boost from the additional rate cuts and or monetary easing on underlying economies should be limited. On the other side, silver prices are not showing any signs of noteworthy improvement, indicating the gold-to-silver ratio in near term will rise further and silver will underperform gold. So I'm not too sure how much I agree with this because silver does. Silver definitely has a lot more potential than gold. So even though the ratio is higher right now, I still see silver, catching up. I definitely see silver catching up. So here's the golden run, the trend in the gold-to-silver ratio in the past year, 1 year. So you can see in the past year, it has risen drastically, and it's actually almost up to here now. So, where are we at? So, let's go down here. So, as a key challenge concerns trend in silver price, which was largely range bound over the first 5 to 6 weeks of the calendar year, from an investor standpoint, the price performance was quite unattractive, especially in light of the rally in gold. To some extent, according to an analyst with a global research firm, reflected disillusionment with silver's price prospects and concerns that it will suffer as global growth concerns deepen. So, I don't think people realize the beneficial properties that silver has compared to gold. Silver is more widely used in the industrial world, in the technological world, even in the medical world. And I think that people look at silver as just gold's little brother. It's not really, it doesn't have much potential. It's a bear market. It moves slower than gold, which is actually not true because silver's more volatile. But people just look at gold as the royal metal, and that's what they're going to turn to for safe haven demand. But if you're talking about gold, you have to talk about silver because silver and gold almost go hand in hand. They almost are exactly the same. They correlate very similarly. So I just think this is a lack of information, a lack of education from normal investors or the newer investors where this new money's coming from to boost prices. So eventually, he expects silver prices to recover when U.S. silver coin and bar demand improved. This, in turn, should lead to an upside breakout in silver prices, which will turn to encourage retail buying on 2 counts, which we were just kind of talking about. First, some of the gold buying and the institutional investors will move to silver. Second, as positive price expectations emerge, some retail investors may buy into a rising market with a view of gaining exposure to silver before price strengthens further. This could be the second half of the CY 2020 from when the ratio is expected to start falling. So they're saying that once people start seeing the ratio lower and people start seeing that silver is actually becoming more profitable, they're gonna hop the ship and jump onto the silver train and actually start focusing on this metal as they see the potential. And this is just something that you could look at because right now, silver is screaming by me. I mean, silver has so much opportunity as it's still low with the gold to silver ratio. No matter what the ratio is, you can still see that silver is a ticking time bomb waiting to explode. So I'm curious where this ratio is going to go. I'm extremely curious to see where this ratio is going to be heading, especially if it does get above 100 to 1. There has to be a correction. There has to be a correction sooner than later. Right now at a ratio of 98.44, there is something really wrong here because it comes out of the ground 8 to 1. 8 to 1. And normal average is around 50 to 1, 60 to 1. I remember the back in the day when it was 75 to 1, but this is too exaggerated. A correction needs to take place. So I'm curious what you guys and gals think about this. Where do you think the ratio should be? What is a normal ratio? What's a healthy gold to silver ratio? Is it 16 to 1 like some speculate? Is it 8 to 1 because that's what it comes out of the ground? Or is it much higher? Or is it much lower? Should it be 1 to 1 like back in Egyptian days? It was 1 part silver equals 1 part gold. Then we saw 2.5 parts silver equals 1 part gold. And that was when the first manipulation started to happen. Because trust me, silver is not much more rare, or gold is not much more rare than silver is. They almost work identical. As silver being the most highly conductive metal for thermal conductivity and electricity, it's not like gold works better than silver. It's just the ratio is manipulated right now. So anyways, I'm going to wrap this video up here. The link to this article will be in the description if you want to check it out yourself. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.